Welcome back to the Research Talks with Alan Green. Hi, Alan. Good to have you on again.
Hello, Mark. Good to be back. How are you?
I'm very well, thank you. And you?
Yes, very good. Thanks. Very good. No followers of me and my company on social media may have seen some pictures from
Yes.
me as a very proud dad last weekend, and my beloved daughter was married, and she's met her soulmate. So yes, very, very good, and just delighted to get it everything done and have a wonderful wedding before, of course, the further lockdowns came
Before
in.
the lockdowns, yeah, it's nice to have something nice during these times. And actually, it's quite an achievement. You wouldn't think that a wedding would be an achievement in a normal circumstance, but quite a feat to have managed to get that done. So that's great. And it was a good day, was it?
It was a great day. The weather was fantastic, and I think we drove back from the ceremony to the reception, and we had two cars that were decorated. And what was really uplifting was people were driving past and blasting their horns and waving and shouting. And I think it just gave everyone around us a bit of a lift too, because I've not seen any wedding cars at all on the road this year.
No.
So it was
awesome.
back to normal. And also the staff said afterwards it was nice to have just a normal event again, because of course the events industry has been decimated by the coronavirus. So
yeah, of course. I think as well, with it being, it would have been a fairly small wedding, wouldn't it? So maybe it was maybe more intimate, maybe than.
Yeah, well, we'd originally planned 150 people, but of course had to scale back, so we got a different venue, and we had 15 people at the ceremony and 30 at the actual event. So but everyone was seated sort of at their tables, although of course things got a little jollier in the evening, but it was still lovely. It was an intimate event, and it went like clockwork. So yeah.
Oh, that's really good. Good. Well, congratulations to you and your daughter then.
Thank you very much.
All of us. So that's why we missed last week because obviously you had that very important celebration to attend. But we're back on. And today we're talking Open, Orphan and British Honey Company, which sounds very intriguing to me. So which one would you like to start with?
Well, let's start with Open Orphan.
Okay.
It's in the news as we speak for all the right reasons. We have spoken about Open Orphan before, of course, but I'll just basically go over and give a brief summary of the company and what it does. It is the company itself would say it's a contractual research organization, but as the year has progressed, and the company have made more acquisitions, they're now very much a clinical. The merger with hVivo has created what the company now says is a European full pharma services company. Initially, in 2019. Open Orphan reversed into Venn Life Sciences, which is an integrated drug development group which offers chemistry, manufacturing, controls, and all the clinical trials we hear about the preclinical, phase 1 and phase 2 clinical trial functions, which of course is very important to test drugs. Through the year, the company continues to win contracts. I mean, we've at the last set of interim results, we heard about a new £4.5 million challenge study contract win with one of the top 10 global pharma companies, and of course what's really I think put Open Orphan on the map so much in line with the coronavirus with the coronavirus and the COVID crisis is that it has through a merger with hVivo earlier this year, it now has the leading quarantine centre in Northern Europe at Queen Mary Hospital in East London, and this has been featured in the press time and time again. So the group currently at the quarantine centre it's got a leading portfolio of 8 viral challenge studies, which are in flu, respiratory virus conditions, and asthma, cough, and a number of other challenge studies, and then of course the coronavirus challenge study models on top of that. So all of these challenge studies are helping pharma companies in developing a vaccine for COVID. And it is today the world leader in viral challenge studies. The closest global competitors only have one challenge study model each, and Open Orphan has 8. So that gives you some idea of of where the company is in the market. And of course, with Venn offering the clinical trials, it's got a full service business. It has a clinical development business in the Netherlands, which is showing strong year-on-year growth. It's got a biometry group in Paris, which is generating strong synergies and providing background and data for these viral challenge studies that the group's undertaking. And the company just continues to win these contracts. And what has driven the share price over the past few weeks? I mean, the share price is currently trading at all-time highs around 27, 28p. When we started out, the company was trading, I think when we last spoke about it, Mark, the company was trading at 14, 15 pence. So it's rocketed since then, but with good reason. One of the companies that has it's working with on COVID testing is a Nasdaq listed company called Quotient. The EPIC code on Nasdaq is QTRT. They're developing a COVID clear test using Quotient's Mosaic technology. Now, Quotient is listed on the Nasdaq. It has a market cap of 665 million. On the last full year, it turned over $31 million and is loss-making. So Nasdaq attributes that valuation to Quotient. Now, if we look at Open Orphan, it's got cash of 14.5, just under 15 million at the year end, half-year revenues of 7.1 million, and an EBITDA loss, the half-year loss of 4.1 million. The group has said post-merger efficiencies are set to reach 10 billion by the end of this year, and with the divestments of underperforming businesses, integration savings, reduction in overheads, it will deliver profitability in Q4. So we've got a company that's probably going to turn over on the full year 15, 16 million, maybe more, delivering a profit. It's still, despite the strong rises in the share price, the company is still trading with a market cap of about 180 million. So if you can compare that to Quotient, if Orphan had a dual listing, and I don't believe those moves are underway yet, but I'm sure the board have discussed it or may be looking at it at some point. But if it had a dual listing, I think we'd see, we would see the company effectively double in value, simply because it's the world leader in these clinical challenge studies, and of course, it's deeply involved in the fight against coronavirus on a number of levels, both in testing and challenge studies, and the outlook for the following year is, or for the coming year, the quarantine center, I think. Prior to the coronavirus crisis, was booked a few weeks in advance. It's now booked 18 months in advance. So it just gives you some idea of the demand that Open Orphan is currently experiencing.
Yeah, I think these sort of COVID stocks, if you want to call them that, they've not had their day. The day is not over yet. I mean, people say that we had a very good time with them earlier on, but the second wave coming, the sort of lockdowns coming back in, I think they could have a second wind in them. Some of them, and yeah, it's just about doubled since we last spoke. Chart looks very nice. So yeah, and that's amazing that they're now 18 months, you say, in advance booking up.
Yeah. I mean, literally, they have the quarantine center booked out. I mean, to the point where one imagines they're probably looking at new premises to maybe expand the quarantine center into somewhere else. But I think one of the important factors is that of course everyone is focused on COVID, but companies like Orphan, I mean, they've got the 8 viral challenge studies they have are in respiratory virus conditions, the COPD conditions, coughs, asthma, flu. So what is happening, of course, all of the extra revenues that they're bringing in from coronavirus will be funding and driving and expanding these other studies. And that's the case with a lot of the big pharma companies. The extra money and attention that they're receiving through the coronavirus, their work is sort of on COVID, whether it's testing, whether it's vaccines, or whether it's something to mitigate the worst symptoms. All of this work is feeding into other areas of the business and also helping to fight other diseases too. So this is a good thing. And of course, the most recent news is that in the coronavirus challenge study, Open Orphan is currently in negotiations with the UK government to undertake a further contract to work with to develop a UK-based coronavirus challenge study. And of course, if that comes in, that's going to be worth at least 7 million to the group outright. So when you've got this sort of revenue potential and growth and the prospect of profitability too, I think the multiples for this for the investment proposition are going to fly higher, and I think there's going to be in probably before the end of the year a significant re-rating in terms of the valuation of the company.
Okay, good, excellent. Yeah, it's a good time to be in pharma, and I've never owned a pharmaceutical company, but I bought my first one last week, and that was Destiny.
You bought Destiny.
I bought Destiny, and that was following obviously what we spoke about maybe a week or two ago. So yeah, I'm no longer a pharma virgin, and I'll have a look at Open Orphan then in a bit more detail as well.
I think I think Open Orphan just have this again with any investment into any sector. You want to you look at diversity, you look at the spread of risk. And where the company generates its money from. The other thing with Open Orphan that's worth remembering too, that they have a health data platform which amasses the data that the company has collected, and it has a lot of individual patient data. And the individual patient data is worth as much as £3,000 to £3,500 sterling per patient. So I know. When that was looked at early this year, they were up to about 10,000 individual pieces of data, or individual patients, or 10,000 different individual patients on the database. But this data will then be resold to the major pharmaceutical companies in order that they can use the data for their own studies. So that's another revenue stream that's yet to come online. So. It's got this real spread of revenue generation, and it's a very rounded, integrated pharma company.
Good, excellent. Okay, great. Well, thank you, Alan. Keep a close eye on that, and maybe we'll touch on it again in a few weeks' time. See where it is.
Okay, right. So Open Orphan is number one. Number two, we're going to look at something that's completely from left field in a sense, but I just like the look of this company. I think they've got they're occupying a niche, and given the way the company has grown to date, I think there's a great deal of potential. It's the British Honey Company. BHC is the EPIC code. The company IPO'd in March, raised 4.2 million at 110 pence, and indeed, as we speak today, it's trading at a mid price of 117.5 pence. And of course, the volume on Aquis isn't the same as volume you'd find on other exchanges, but nonetheless, a lot of great companies started out on the Aquis exchange, of course, formerly known as Plus Markets and Offex in the past, but it's companies like Chapel Down Wine, for example, they started out on the Aquis exchange and have done very well from that. So British Honey Company, they are, as the name would imply, they're the leading independent honey producer in the UK, producing some 7 million tonnes per annum. Centered around the Cotswolds, they have an estate in Oxfordshire as well, where they develop and produce their own brands of spirits, which is the Keeper's Spirit brand, and all of their spirits are infused with the honey they produce. So it gives these spirits a really, really unique flavour. the range of spirits include organic gin, London distillery whiskey, bourbon whiskey, vodka, and various liqueurs. And also, they've developed seltzer, which is an alcoholic sparkling water, which I find intriguing. I must try at some point. um, but as often happens with production facilities producing one form of product, the production facilities can often be lent to or used for other purposes. And during the COVID crisis, the company used its production facilities to produce alcohol sanitizer, and sold huge amounts, and supplied supermarkets, and the results that were announced earlier this month, the results to the end of August, they'd already made 500,000 sales from of individual alcohol sanitizer units. So that's pretty significant as a group. So the company has undertaken a number of developments this year. In July, the company announced a joint venture with Cottesmore, where British Honey Company and Cottesmore will each invest up to 1 million to set up and operate a distillery on the Tusmore Park estate, which is where the company operations are based in Oxfordshire. The company expanded on a global licensing agreement with English Heritage, so that means that over 400 of the English Heritage monuments around the country, you can buy British Honey Company products. And also, the company has expanded into the USA with the List Distillery in Florida. And the arrangement there was based around a share swap, so no cash has changed hands. A share swap basically saw List Distillery take 4.5% of British Honey Company, and in return, British Honey Company now earns 10% of List Distillery. So that was a very well executed deal, and I think one that has added real value to the group. So the CEO is a dynamic entrepreneur, as you can imagine, a guy called Michael Williams, who's 77 years old. Which I think throws down a great marker for all of us going forward. He's busy and active at 77. He's ex Hewlett Packard, Altos, Freecom. He's been involved in a number of very successful sales of businesses to companies in the years he's been working. The chairman is a guy called Philip Sears. He's ex Credit Suisse and Phoenix Securities, and the FD is also founding shareholder Alistair Wallace, and also a non-exec director on the group is Robert Porter Smith, who basically started Natural Balance Foods, built it up, and sold to Lotus Bakeries in the Netherlands. So a great bunch of entrepreneurs. So the company announced results to 31st of August, and during the period, revenues grew by 440% to just over $1 million. I should say the company currently has a market cap of just on 11 million. It increased its gross profit 12-fold to 690,000, and halved operating losses to 345,000 from 612,000 previously. The company still has net cash of 3.45 million, which is very strong. As I've already mentioned, it made 500,000 in sales from alcohol sanitizer. So, of course, if there is a fall off in alcohol sanitizer sales, both investors will look to see that fall off in sales picked up by other parts of the business. But the group said it's very well placed to adapt to uncertainties. It's worked well during the COVID crisis. It's got a strong cash position and a highly skilled workforce. And I just think a niche operator like this, it often can make a really good investment because it's got a market all of its own, and certainly the way the group are expanding with the deals they've got with the likes of English Heritage and share-based swaps to expand the business overseas. I think you've got a very canny management team here who are managing this business well. I would not expect this one to suddenly fly, but I do think it's an interesting niche investment, and when you're looking to build a diversified portfolio, companies like this can actually make a lot of difference, and also, over the years can really surprise you as well. So, one to watch.
And so I'm just looking at that on LSE. So there's not a whole lot of information there at the moment. Is that an LSE problem, or is that I don't know, just the fact that it's sort of relatively new company? Because it actually says the market cap is 0. Obviously, that's not right. It must be London South East. It's just not updated.
Yeah. If you go to Aquis, AQUIS.eu, that's the exchange it's traded on. So, so if you go to Aquis.eu, you'll see the shares. That there's a trading chart there, and there's a full description of the company. But also, if you go to British Brown Honey Company website, all the information that you need is on there, and of course details about the board and everything else. So, the other thing that I want to mention too is that the company's got its own HMRC compliant bonded warehouse, and it's developed its own end-to-end IT platform to support the entire business. So it's got full traceability for each bottle and jar of product that's put out by the business. So that's key. So it doesn't need to rely on other technology partners to support the business. It's all been done in house. So that to me says it's a self-sufficient business. Already we've made very good progress this year, very strong progress, and I can just see this business carving out a niche for itself and continuing to deliver growth.
It's definitely a niche. I wonder how you find these companies.
It just came to my attention. I think it was the name more than anything. I thought that's intriguing because I think beekeeping's a bit of it's a very British thing, isn't it? It's you get lots of people, and they have the sort of
the gear and the suits and
the gear, the suits, the hives at the back of the garden. And in fact, we had a bee's nest in the garden, and we had a chap come in, and he took away. He got the queen out of the nest and put the queen into this box, and all of the bees. I think he reckoned there were 25,000 bees in a box that I guess was a couple of foot wide by a foot high, and deep. And you pick this thing up, and it was quite heavy, but it's just humming. It quite something. So it's a niche industry, but honey's a big thing. It's a big product in this country and elsewhere, of course. And I just think, well, that's great if somebody's actually, if there's a business around that, and of course, taking the step of infusing, a range of drinks with honey to give a unique flavor it's a very innovative idea, and they're selling. They're doing well. They're supplying. You can buy this stuff through Waitrose, Majestic, Amazon, and not on the high street. HT Drinks and various other websites. So they've got a good distribution network in place already, and
Good. Yeah, I like bees. Bees are fun. I've always fancied being a bit of a keeper. I don't know. I just like them. They're nice. They're nice things, and I think there's a lot in the press at the moment about bees under threat, and I can see on their website that they've got actually a piece on that. Saving the bees, so that's another sort of bonus, if you like, as part of their company.
Well, there is and I think everyone is now aware that bee-friendly plants and flowers in the garden. It's very important to. And there's a real consciousness around that now. So, but yes, as you say, I mean, British Honey Company are really they're helping the bee to prosper. We're creating more environments for bee-friendly environments, bee-friendly flowers, and with the hives they go back to, they can then continue to produce the wonderful honey that
we all enjoy.
Enjoy. Yeah, it's
great.
It's a great thing.
Well, Alan, thank you very much again for that. Thank you for your time. Good to talk again.
Thank you, Mark. Good to talk again.
Thanks, then. Bye-bye. Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.